So we've had the Bank of England base rate reduction to 4%. Let's talk about it. Hello everybody, it's Pam here from Niche. It's been a while, but we've had the interest rate decrease. So I thought I'll just do a quick video to talk about interest rates, talk about mortgage rates specifically, how mortgage affordability has changed over the last couple of months, because it's important. A lot of people have got mortgages or are looking to get mortgages. There's been a lot of changes around that, and we'll talk about some of the criteria, some of the products that I'm quoting, some of the things that I'm seeing in the buy-to-let market, and generally talking about, how this interest rate may affect us in the future, real life examples. Okay, but first of all, let's address the interest rate decrease. Obviously, it's been coming. It's been sort of pushed out there for a couple of months now, well, a couple of weeks certainly. And in fact, I was writing comments for people that are writing stories and journalists about the interest rate decrease in the last week. So certainly it's no big surprise. Although what is surprising is how tight it was to get this interest rate decrease decision made. It was very, very tight. They had to go in there again, and they essentially had to vote again. So it's, even the people that are supposed to know about everything don't necessarily agree on things. And the reason for that is we have got some challenging things on the market. And one of the things is US. US is a very worrying sign for us. The economy has held quite well, considering what's been through, but you've got dismal job numbers that have come out in the last week, and you've got this tariff situation where inflation is going to tick up. It's just natural costs are going to be passed on to the consumer, and the consumer spending is going to tighten up. And if that happens, we're going to get affected because we are so closely linked to the US. And I think probably the decision has been made to say, look, let's try to get the interest rates down. Let's try to move the economy as much as we can before the bad news comes in. Because remember, we're in the summer right now. We're going to go into the winter. What happens in the winter? The first thing happens is you get an email from your utility company to say, oh, we're going to bump up our price. And I think, the challenges within that is the Russia situation has not been resolved. In fact, it's got worse. You've got the Iran situation has not been resolved, and I think probably round two is probably going to be down the line. You've got trade wars happening. I mean, big oil consumers like India, big economies being affected, and there's trade barriers and trade wars. And these are huge economies. You're talking about China, Russia, the US and India. I mean, they are massive economies. So if they're going to have a little bit of a spat amongst each other, we are going to get affected. Definitely, as consumers of the world, we're going to get affected. So that's what I think. I think it's premature. I think actually inflation is going to go up, and I think rates are not going to come down massively the way they said it was going to come down massively. It will may gradually come down, but I don't think it's going to be a big step down in the next 12 months as predicted by some of the people in the know. Probably about 6 months ago, I would say. So I don't think it's going to be coming down that fast. Product-wise, the lenders, actually, the mortgage lenders have actually been quite good, and they've preempted this interest rate decrease. So I'll give you an example. I quoted one of my clients this morning a 3.79 mortgage rate. Now, that's a very good interest rate. We were always hovering for the last 12 months, I would say 18 months. We've been hovering around the 4% mark. So 3.99, it would go up to 4.15, 4.12, something like that. It will then come down to 3.99. But it was very difficult to break that barrier, that 399 barrier. Well, we've seen it broken. I mean, and it wasn't a huge fee on that deal. I think it was 3.79 with a 999 fee with a free valuation. So I think that was a purchase. 60% loan to value. So, you need to have good deposit on that deal. But we are seeing those. That was a 5-year fix. We have actually seen quite a bit of parity between the 2 and 5 year. Historically, there's been a big gap between 2 and 5. 2 were more expensive than a 5. 5 was a lot cheaper. But that gap has got a lot smaller. So rates are competitive. Rates are actually quite good, considering that I did my own mortgage. When was it? March, I think. March I did, and I got a 4.55. Yes, granted, it didn't have a fee because I didn't want to have a fee. paid on it. So it was a 4.55 rate. And that's like, the loan to value was good and everything. So it's come down quite well. Granted, this one's got £1,000 fee, the other one doesn't, and I've only taken a 2-year fix. I took a 2-year fix because I thought, I'll sit it out. I think I'm in a position where I can afford if it gets volatile. I didn't think it would go back up again, so it's just a matter of how much it's going to go down by. And I thought I'll have another bite at the apple, is it, or cherry? I'll have another bite in 2 years' time, so I'll sit tight. So, and I personally think many people have actually, locked in for 2 years and seeing what happens. There are special cases where you tend to go for a 5-year if there's not much loan to value. You don't really want to be in a negative equity in 2 years' time. You want to have some options. For example, if there are going to be massive changes in your circumstances and you just want a less volatile life, you tend to go for the longer fixes. So yeah, we've seen quite a lot of movements around that, but rates are actually really competitive. What's happening in the market is buy-to-let is flying still. A lot of limited company transactions. We've seen one of the UK's biggest lenders, Birmingham Mission Solutions, which is called BM Solutions, part of the Lloyds Banking Group, actually finally come out with a limited company proposition. So they're now accepting limited company deals. We've seen a massive change in the buy-to-let sector, moving from personal names to limited company structures, really driven by taxation, but it's not always the best. I have to say, a lot of the times I get people calling me and say, oh yeah, well, I want it in a limited company because I think that's the best for tax. Well, have you sought tax advice? Because in your circumstances, you might be a lower rate taxpayer. You might only have one buy-to-let. You might want to only have one buy-to-let. Well, does that really make sense for you to, start opening up a limited company? How you're going to take that dividend income in the future? How you're going to get your income in the future? All of those things will have a bearing. I'm seeing a lot of these smart companies, layered companies. This is where there's a holding company and then they own the other company. Maybe there's A and B shares, the voters' rights. There's a lot more complication when it comes to limited companies. And some of the lenders, some of the more vanilla, straightforward lenders will not like those structures, okay? Some lenders will not do trading companies and then a company beneath it, so layered companies. So that's what's happening on the buy-to-let sector, but there's a lot of movement and there's a lot of innovation happening within the buy-to-let sector. Visa, foreign nationals, big sector at the moment. I think they're the only ones that are buying, frankly. We seem to see every single lender out there coming up with various criteria, whether it's residential or buy-to-let on foreign nationals with Visa. Contractors, again, that's another sector, self-employed and contractors. Now, we have seen some positive moves in the specialist sector. These are for people that don't fit the high street. Now, that could be because of you're self-employed and the way you make your money. It could be because you've got additional incomes, additional sources of income. It could be because of your credit profile. It could be because of all sorts of, it could be because of the property type. It could be because of the scheme that you're looking to buy. Now, we've seen some positive moves on affordability and criteria loosening up on that. Okay, so again, whereas maybe you couldn't have borrowed £20,000-30,000 more, you can now. So there's been a loosening up on affordability. Generally on affordability, things are really getting better. Okay, we've had some direction from the regulator, which has helped to loosen up some of the lending criteria, which has helped them to change the way they stress test, which means in short of it is you can borrow more. You can certainly borrow more than you could 3 months ago. That's from high street banks as well as specialist banks. So there's been a lot of movement. We have got lenders that would do 95% up to 6 times income, for example, which is really good. So yeah, that's what I think about interest rates. I think it's a little bit premature. I think it's, if you're in the middle of getting a mortgage or you're in the middle of buying a property, get it while it lasts, because I think it may even, although I don't think interest rates will go up, the price of funding will go up. And sometimes people don't understand this. People go, well, I thought the Bank of England is reduced. Why is the lenders increasing their rates? And sometimes there's a correlation and sometimes there isn't a correlation, because lenders will borrow their money from other institutions, okay? So sometimes it's not linked to each other. But yeah, hopefully everybody's healthy and well. Please leave a comment. Let me know what you guys think. It's been a long while since I've done a video and I have missed you guys, and I do miss reading the comments. So I'll be grateful if you can leave some comments. Let me have your thoughts on everything, and then we'll take it from there, and hopefully I'll catch you on the next one. All the best and take care. The content of this video does not constitute giving advice. It's purely for information purposes. All cases should be discussed with a professional mortgage broker. As a mortgage is secured against your home or property, it could be repossessed if you do not keep up mortgage payments. Niche advice is authorized and regulated by the Financial Conduct Authority.